Incorporated. He is a loan officer with that said company. His location is Wisconsin Dells and Madison. He's been 13 years in this business. His previous type of job is advertising, sales, robotics, and construction. His family is 2 children. He has Nathan and Alexis. And he has one animal named Banjo. That's his dog. It's a really cool dog. His hobbies are hiking, backpacking, and scuba diving. His activity of interest is working around the home and his land. And you can tell when you go see it. The city of residence is over in between Reedsburg and Wisconsin Dells. He's been there for 27 years. His burning desire is to hike the length of the Cascade Mountains. And something that no one knows about David is he was once face to face with a shark with no cage. And his key to success is never stop learning because change is a constant. With that, take it away, David.
Alrighty. Yeah, you know, I was face to face with a shark, and it wasn't with a cage. It was pretty scary. It's about the size of a dolphin, but you know, I can see how people get limbs lopped right off because that's what they're there for. Very efficient predator. I'm with Atlantic Mortgage. We do all types of mortgage loans. I gave everybody 3 handouts. Mainly I'm going to talk about credit today because that's the thing that most people ask questions about. But we do FHA loans, FHA 203K, rehabilitation loans, FHA, the main thing with FHA, it's a low down payment, lower underwriting standards. We go down to a 620 credit score, and you only need 3.5% down payment. A conventional loan is just like what a bank would do. And a lot of people say, well, why should I go to the mortgage company instead of a bank? Well, most banks, if they're lending their own money, they just do conventional loans, all right? Because they can't sell the Fannie Mae or Freddie Mac, or they can't sell the FHA, so they specialize in just the one type of loan. We do them all because we can sell the 13 different banks. With one won't buy, the next one might. And so that's why we underwrite all our loans. So the buck stops with us. So if someone has a question on a product, one thing that isn't on here is if you write something down, the Madison Mortgage Guys, that's the website that our office maintains, and it has every information on every loan program you see in great detail there. It's over close to 400 pages consists of the website, so go to if you have questions, the Madison Mortgage Guys. We do home path loans. Home path is being phased out. That's how Fannie Mae got rid of their foreclosures. They put them on one website, home path. They are closing that down. There isn't enough foreclosures that they just go through real estate agents now, which they probably should have been on the whole time. The home-style renovation loan is the same thing as the 203K. It's a rehabilitation loan. It's just like where the people need to do septic and be going and finance the repairs, right in with the purchase of the home. VA, the best mortgage out there. If anyone's a veteran, they should have a VA loan. There's no doubt about it. There's no private mortgage insurance. There's no down payment, and the lowest interest rate available. USDA Rural Housing Loan. USDA does finance 100%. No down payment is required. It's a very good loan to have. There's 2 things in the USDA loan. They do cap income, but they don't cap house size. I guess they figure the dollar amount of the house that people can afford, they'll hit that income level before they'll ever hit the limit on what the housing allowance would be. Reverse mortgages. Reverse mortgages are for seniors. And what a reverse mortgage is a mortgage in reverse. Instead of paying down the mortgage, you're adding to your mortgage every month. It's satisfied after you leave the home. Jumbo mortgages, which we really like to do. Anything over $417,000 is a jumbo mortgage. We can finance up to a house of $2 million. So keep us in mind if you know anyone needs a jumbo loan. And then WIDA is through the state of Wisconsin. WIDA will also finance 100%. It's mainly geared towards low income, but low income to them it starts at about $60,000 is low income. So it doesn't sound like low income, but that's what it's geared towards. Atlantic Mortgage, again, a little bit about us. We've been in business since 1993. We are one of the top mortgage companies in America, within the top 100. And how they base that is off revenue. All right, it's just how many mortgages you do. We are in 15 states, and I'm licensed in 3 of them. We are one of the best workplaces in Wisconsin. Of course, I hope they didn't get that from Yelp, but it is something that people do vote on. They ask us to vote on it too. And we do have the top loan originator for USDA. That's how many we do. In fact, that lady is in Wisconsin too. The top person in all United States for USDA loans is in Marshfield, Wisconsin. Her last name is Len Art. She got an extra T in there. Morris is her first name. So, but anyway, she's the top in America. I just want to talk a little bit about credit, all right? Credit is what I get asked about the most on, and it's what we get the most calls for. It's because why? Well, there's this one little line on them 300 pages that mentions bad credit, how we work with people, and that seems to get seen a lot. So, and what I mean by bad credit is under 620. Why? At 619, you just don't get a loan. So people do need 620 and above. And why would they put these numbers in here? A lot of times people say, well, you know, why don't you go down to a 580 credit score? When they study credit, they call it risk-based pricing, but they look at what the credit score is and what the chance of getting foreclosed on. When someone has a 740 or above credit score, you get the best of interest rates. The chance of foreclosure is 1 in 1,400 and something. When you get down below 620, it's 1 in 8. All right, when you get down to a 580 credit score, it's about 1 in 3 chance you're going to get that loan back. And when you get down below 520, why I bring up 520 is New Century was the largest mortgage company to fail, was New Century Mortgage, and they were the first ones that started this on the downhill slide. Well, they used to go down to a 500 credit score. That's about a 50-50 chance you're going to get foreclosed on. I just can't imagine lending in someone with a 500 credit score. I mean, that's like flipping a coin on a mortgage. I mean, come on. That doesn't make any sense. So 620, 693 is the national average. Of course, that changes every month, but that's always been pretty close to what the national average has been, is around 693. It has come up a little bit. It did get lower with auto foreclosures. The information on this sheet comes from, you see that My FICO score, that MY FICO? That stands for Fair Isaac Corporation. Fair Isaac Corporation computes all 3 credit bureaus. There's 3 credit reporting bureaus. When we do a loan, we throw out the high score, we throw out the low score. The loan is based on what your middle credit score is. But one company computes all 3. So they compute them for each one of those other companies with their own formula. Already, but only one company is doing it. If you want to get your free credit report, the address is right on there, endofcreditreport.com. Don't go to freecreditreport.com because they're charged for that. That's owned by, I think it's Experian credit company. So don't go to free credit report. 70% of your credit score is what you've done the last 2 years. Most of it's recent history. So a lot of times people think, well, it's the stuff I did in the past that's dragging me down. It isn't. Most of the stuff is what's happened in the last 24 months. What we do is look, especially during the last 12 months, because 12 months, you can see patterns. Something's happening to someone. It's usually recent. If someone's had medical problems, you see medical collection scores come down. So most of it is recent history. 30% is your past history. If the courts put it on your credit report, it's there for 10 years. Everything else is gone after 7. So if someone has a brand new debt, it should be going after 7 years. It isn't. It's on there for 10 years. Civil judgments also. Those are put on by the courts. What goes into your credit score? 35% of your credit score is payment history. That also means late payments and collections hurt worse than anything else. So payment history is the biggest portion of your credit score. The amount owed on credit cards is the second biggest factor. What does that mean? Whenever you carry more than 30% of your limit on your credit card, you are affecting your score negatively. That doesn't mean you're going down. All right, what you're doing is you're slowing your speed going forward. If you got 40% of your limit, you take a little hit. 50%, another hit. You get to about 80% of what your limit is, depending on how much credit you have, and you can stand still. 90%, you're going to start slipping a little bit backwards. People go over their limit, scores plummet, and not only that, you go over your limit on your credit card, read the fine print in your credit card statement. I've got one in my bag here if anyone doesn't believe us, but in that fine print it says, you go over your limit, 2 things are going to happen. Your interest rate just doubled. They call it the default rate. So if you're at a 12.99 APR, well now you're going to be at double that. I mean, just take 12, that's 24, almost 26% is going to be your new interest rate. And it's not on there for 1 month. It's on there for the life of the card. Go over your limit, the exact same things happen, or have a late payment, the exact same thing happens as if you go over your limit. you're going to go to the default rate. So two things you want to remember in a credit card: don't go over your limit, and don't have a late payment. Otherwise, you want to call that credit card company right away to see if you can negotiate a lower rate or even raise your limit. Call them and ask them to raise your limit if you're getting close. But if you just have payment history with the amount owed on credit cards, well, that's 65% of your credit score. So credit cards with low balances paid on time is driving the score 65%. The easiest way to bring people's score up is with credit cards. New credit. Open a new credit card, you take a hit. You don't take a hit for a mortgage or a car loan because they have end dates. Open a new credit card, you're going to take a hit. Why? You can carry that debt to your grave. So if there's a hit for opening one. Length of credit history. Well, if there's a history with something on your credit report, it carries more weight than something that's brand new, simply because we can look back and see how the payment history is on that going back 7 years. And then types of credit used. Usually the department store cards don't carry the same weight, or gas cards even, as Visa, MasterCard, American Express. Reason being, shorter billing cycles, higher interest rates, so they just don't carry the same weight. This just goes over everything I just said. Payment history, biggest part of your credit score. Amount owed on credit cards, you can just see it. Risk goes up as what you owe goes up. Perfect number of credit cards to have is 2 to 3. 0 credit cards and 8 or more credit cards are high risk. Now, why would you say 0 credit cards are high risk? Well, how people handle revolving debt is a good indication of how they handle their finances. So if you don't have any revolving debt information, there's not a lot to go by. If you just have, let's just say, one car payment or one student loan and you see the payment history, you don't see how they handle revolving debt. So like I said, that is a very good indication. And a lot of small businesses, too, they'll have credit cards simply for cash flow. The easiest way to cash flow is with a credit card. Borrow, pay it off, borrow, pay it off. So it's a good way to see for self-employed people how they handle it is credit cards. And then the number of credit pulls that they allow you during a 12-month time period. 5 if there's a bankruptcy, otherwise 7 times a year you can have your credit pulled. Now, when you go to buy a car or you go to get a mortgage, there is an exception to the credit pulling. It says this, is all credit pulls for a mortgage for 45 days is a window for the first time your credit's pulled for a mortgage. Then all credit pulls for a mortgage during that 45-day window count as one credit pull. It's the same thing for a car. You can shop for a car, go to 10 dealers, all 10 can pull your credit report, and that's going to count as one credit pull, a 45-day window. And they have that in there because when we do a loan, we're going to pull the credit report 3 times just during the loan process. Once on the initial application, once when we submit it through underwriting, and then again, right prior to closing, we do pull a credit report to make sure someone hasn't gone out and made a large purchase to change the debt ratios that we just approved their loan under. So it is going to get pulled 3 times with us alone. And even, that's it, huh?
No, you're not done.
Even when we go to close on the loan, if there, you can see on the credit pull that someone pulled their credit, all right, then we have to find out why they had their credit pulled, because right up to the time of closing, if someone has an inquiry around their credit report that just says their credit was pulled, we need to know if any new debt was taken up, because you could buy a new car, it might not show up in the credit report for 3 months, but that credit pull shows up instantly. So we would know. So I mean, people think, well, I buy new furniture here for the house, and there's no payments for a year. They'll never know, but they signed the contract. Well, when you buy something like that, that's a maxed out credit card. So if you buy furniture or appliances, no payment for no interest, no payment for 1 year, what you did is you signed up for a credit card at the limit of what your purchase was. So now you've got a maxed out credit card that's going to report for that whole year if you're not making payments on it. So I do caution people that there is cost to credit, even if you're not paying it, you might be paying it another way through a lower credit score. Does anybody have any, oh wait a minute, one other thing is the changes to the credit report. Medicals are going to take 6 months for medical collections now to hit the credit report. Usually when we see people that have perfect credit, but you'll see 1 or 2 blemishes, the score's down, it's usually for something the insurance didn't cover. Right? There was a co-pay, there was something, they have insurance, and it's a $30 or $40 bill didn't get paid, it would hit as a collection of medical. They are changing that for 6 months, so people can take time to rectify that, because a lot of times it goes right to collection. They don't even send people bills. They just sell right to the collection agency. So that is one thing that they were changing on the credit report. They are making it easier for people to get items off of their credit report. You see these companies advertise and bring the credit scores up right away, and how they simply do this, they dispute everything. So they'll sign something up, they'll send something to the credit bureaus, dispute every negative thing on the credit report. What ends up happening is people in India go to contact these places and see if that was reported correctly. Most of them won't answer. So automatically that comes off your credit report because no one responded. What's all automated? They're calling someone in India. They're changing the way that all is. They say it's a benefit for the consumer, but it might not be. All right, the credit scores might reflect every single thing, and it might be impossible to get them off. Right now, they make it pretty easy for credit companies to get things off of your credit report. That might all stop with this, so it might not be the big godsend for the consumer if people have something negative on their credit report. So those are the major changes with the credit reporting bureaus. Any questions? Yes?
I heard years ago that if you close credit cards, that you get a hit.
Yes, it can if you owe money. And let me just explain something. Let's just say you have 10 credit cards. A $1,000 limit on each one, so you've got $10,000 in available credit. Alrighty? Now, let's just say they're all maxed out. You have 10 credit cards and you owe $10,000. Now, you're not getting anywhere paying them off, so you close half of them. Or excuse me, let's say you owe $5,000, and I meant to say, and your limit's $10,000 with all the credit cards all together. Alright, so you have 10 credit cards, you owe $5,000. Now you're not getting anywhere, so you close half of them.
How do you close them without paying for them?
No, you can still close it. You can close a credit card but still owe the money. All right, so you can close a credit card. What ended up happening is now you went from owing $5,000 with $10,000 available. You closed half your cards. Now you owe $5,000 with $5,000 available. So your score goes down because now you're not using 50% of your available credit. You're at 100% just because you closed credit cards. If they're all paid off, it doesn't matter. All right, but if you owe money on your credit cards and you close some accounts, your score is going to take a hit simply because you're changing that back-end ratio. Yes?
And also, if the length of, if you close the credit card that you have the longest, let's say you have a credit card for 15 years, and you close that one, and the next account that you opened was 5 years ago, then your automatic length of history goes down to 5 years instead of 15 years. So that affects your 35% of your score as well.
It does. Mainly it's going to affect if it's within 2 years, though, because
Right, well,
30% your past history. I think you do in the last 2 years. You're right.
Right.
It will change it because that's into 70% of your credit score.
Right.
So,
What about if you get rid of cards versus like the department stores versus, and because people don't realize they have cards sitting out there.
Yep.
And it's good to get rid of those cards. So do you take a positive hit whenever you dump cards that are errant cards sitting out on your score? A lot of people don't. I've seen cards that I had. It's like, oh, I didn't know they were out there. And how quickly does that, when you clean out a card that has been sitting there, you didn't know was closed and has been sitting limbo on your credit report, how quickly does that add benefit to your card or to your FICO score, I wonder?
that's going to depend on what your outstanding balances are on all your cards. I tell people don't close any of them. If you don't want a credit card, cut it up, burn it, and they will close it. Most of the time, if you don't use something in 12 to 24 months, they're going to close it automatically.
I've seen cards that are I've run mine in the last 5-10 years, and they'll show like an old Discover card just sitting there in limbo. You know, it shows it's on the records.
Well, when you don't have it,
No, I don't use it or whatever. I've seen this plenty of
I
times.
can't believe they haven't closed it on.
I've seen plenty of times where cards are just sitting there. You run your report, and it shows cards that are sitting there, or maybe an old Sears card or something.
Well, just remember, 2 to 3 is the perfect number to have. If you got 8 credit cards, you owe nothing on all of them. It isn't going to matter to close all of them. You know, if you don't owe anything, it isn't going to affect your credit score.
You said to check not my free credit report.
Yep, annualcreditreport.com. Yep.
This one right here.
This one right here. Free credit report at annualcreditreport.com. That my FICO score is where I got all the graphs from, and all the information came from the company that computes all 3. They're the ones that have that myficoscore.com. There is charges, at my FICO score, but that's where you get the information on it. So,
creditkarma.com.
You can use it, but if you get your score